All right, let's start then. I've read through a number of the comments, and it looks like people have different expectations, things they are looking forward to knowing about the VAT law. So we can start our session, right? So welcome and good morning to everybody. Thank you for making the time to join. In my view, this all-important session. It is a new law that everybody is trying to kind of figure out, right? So this session is meant to walk us through the VAT law. It's an interesting law. It has changed quite a number of things, and I hope we all attend this session with an open mind, and we can exchange ideas. At the end, if there are any questions, you can ask, and then I'm sure we will have a good time today. So good morning, and we can begin. So before we start, we would be, of course, we are on social media. If you don't want to miss any of our upcoming sessions, this year we'll have a number of sessions of this nature. We are a knowledge sharing organization. We disseminate knowledge, right? So for example, this is a free session, which is going to make sure that everyone here, at least you should have a very good working knowledge of the VAT law. So if you don't want to miss any of our sessions, you can follow us on all our pages on social media, on YouTube, on LinkedIn, on Facebook, on TikTok. We have a WhatsApp channel actually as well. You can also subscribe to our WhatsApp channel, and you can get our updates at all times, right? So that if anything, you can also stay very much ahead of the curve, right? So my name is Michael. You can call me MSL. I'll be your facilitator or host for today's session. It will be a very, very interesting session. And I can bet that you are going to leave here with a better understanding of the VAT law than you came here with. That is my target. If I'm able to meet that target, then my job here is done. So you are wondering, so MSL Business School, we have Tax Law GH as our dedicated tax and fiscal policy unit. So this webinar is held under the joint auspices of MSL Business School and Tax Law GH. So we dedicate Tax Law GH to tax and fiscal policy in Ghana. So every year when the annual budget is read, for example, we have sessions walking Ghanaians through the budget. Our approach is quite simple. We're not doing any of the technical section numbers. So if you are someone who likes section numbers, you can come and we'll have another session. Okay, this one is for the Ghanaian citizen. What is changing? How does it affect you? So you won't hear me doing section, this subsection, that paragraph, this today. We can have that discussion later for those who are interested. This session, I'm doing it for the Ghanaian people who want to know, like, what is this law about, right? What has it come to change? So that is the idea. So give us a follow on social media, both MSL Business School and then Tax Law GH, and you'd be up to date, right? If you need training or support, you can send us a WhatsApp on this number. WhatsApp only because sometimes it can be difficult answering all the calls. Our team is quite small, right? So if you need training on VAT, your organization needs someone to train them on VAT, contact us. We can do what we are doing here, but specifically for your organization, right? So if you're a company here and your organization is lost, like what is this VAT thing about, and you need training, send us a WhatsApp on this number and we can arrange for a training session with you. If you need support, if you need someone to help you with compliance, you need a consultant, send a WhatsApp to the same number and be specific. You need a consultant to help you register or whatever. We have a lot of people we can refer you to. We can assist you if necessary. But yeah, this is for everyone who needs that level of support, right? What do we do? Again, little introduction. In simple terms, we use cutting edge technology to train future global leaders. It's as simple as that. We are a technology forward institution, right? And I dare say in Ghana, we are leading in technology and we are always innovating. right? And that is what we use to do all our trainings, right? During the course of the year, we'll roll out additional trainings. If you're interested, just keep an eye on our social media pages and you'd get all of these trainings. This year, we'll roll out some new trainings, probably end of this month, which would benefit everyone who wants to stay ahead of the curve, right? So, in one sentence, the very best choose to train at MSL. It's as simple as that, right? You can tell who a person is based on who they affiliate with, right? And we believe the very best in Ghana, the very best of the very best, choose to train at MSL, whether it is our professional programs for the chartered accountancy program or the chartered taxation program or masterclass programs or even trainings generally, right? We believe people who are very particular about achieving the highest standard of excellence choose MSL and nowhere else. So that is what we identify as. After this session, we are going to upload the recorded version on our YouTube channels. So that should probably be sometime, maybe end of day or early tomorrow morning, one of them, but it will be on YouTube and catch up in case you missed anything. Before we start, I am a big fan of disclaimers. It is good that we draw the barriers and then we segregate what we are here to do from what we are not here to do. So the first thing is that this session is a legal review of the VAT Act. This is being conducted 7 days after the law was passed, or the law became effective. Technically, it was passed in December. So today is January 7th. It is 10:14 a.m. at this time. All of us here, we have more questions than answers. So the views expressed here, please, they do not reflect official government position. They do not reflect GRA position. There are some questions that up to now, the Revenue Authority is yet to answer. There are some questions that, as at now, GRA is yet to answer. They are still giving us guidance, right? But of course, it's a new law. Everybody is wondering who should comply, who should do this. So, as much as possible, please, this is a legal review. We should not hear reported speech that you went to some session and you were told this. If GRA later comes to say, no, it is not this anymore, let's do this, please, GRA's position, whichever it may come later, would override this. Okay, I am interested party like yourself, citizen of Ghana like yourself, who has read the law cover to cover, sharing what he found from reading that law so that you don't have to stress yourself, right? Okay, in terms of the basis, this session is based on the VAT Act and publicly available Revenue Authority guidance in force as of this morning. So technically, it is what is in the public domain I'm going to share today. If GRA had a meeting yesterday, discuss something they are going to tell us today or tomorrow, I don't know it yet. I'm not an agent or officer of the GRA. So this is based on what we all know as citizens, right? So I'm in a position to understand this relatively better because I play with tax on a daily basis. And my final disclaimer is whilst due care has been taken to ensure everything here is accurate, right? I've done my best, the team, we've done our best, right? Please take this strictly that it is for information and educational purposes only. Don't interpret this as representing professional tax or legal advice. Again, let me repeat the disclaimer so that it is captured in the recording very well, so that we don't hear cases of I went for some session and I was told to do this. So GR brings you a liability and you said no. Some Michael somewhere told you, please, this is for information and educational purposes. If you want binding advice, please consult a consultant. Okay, and I left a number on the screen earlier. If you're looking for a consultant, you can reach out with someone for you. But this session, this particular one, is for information and educational purposes only. So, with all of that out of the way, we can start. What is VAT? Because I mean, some of you here are not tax persons, right? So it wouldn't be fair on my part to just start by saying, and this has changed and this is that. There are some of you here wondering. You probably saw the flyer, you're like, let me go and see what that thing is about, right? So what is VAT in the first place? VAT, when we say value added tax. Now, in a very simple sense, it's a consumption tax, right? So I like to call VAT registered persons unpaid tax collectors. You know why? You have been given a job by government to help government collect tax, but government doesn't pay you for that. So that's why I'm saying you are an unpaid tax collector. You are helping government collect tax. That's what VAT is actually, right? So government essentially says when charging your customer, add X% for me and send my X% to me. That's VAT at its core, ladies and gentlemen. That's VAT. At its very core, government is saying that, oh, okay, you're a businessman, right? Okay. When you are selling something to your customer, when you are rendering a service to your customer, just add a certain percentage. I'm not going to talk about the technicalities now. We'll get into that. Add a certain percentage. It will look like a margin, meaning that the price of your good or service will go up by VAT. You take your money and give government's money to them. But government is saying that there are some legitimate, what we call input tax deductions. This is what you pay someone else. So you see, you are selling to someone and someone is selling to you. So when someone sells to you, that is your input tax. You are the business here. When you sell to your customer, you charge the output tax. The difference between what you charge your customer and what somebody charged you, we have some legitimate ones we call input tax deductions. The law says that you are permitted to deduct your inputs from your outputs, and then you give the difference to government. This is VAT, ladies and gentlemen, at its very fundamental level. So once you are a VAT registered person, I said what? You are an unpaid tax collector. Don't quote me anywhere. You are collecting tax for government. Actually, you are using your system, your resource, everything to collect tax for government. Send them their money, but they don't pay you for that work you are doing technically. So it's like you are doing this for government for free, right? Why is this important? It is important because, as we'll find out in today's session, a lot more Ghanaians are going to take on this role of unpaid tax collectors. In the past, it was the reserve of only a select few. If you did not meet a certain condition, you were not going to bother yourself. But today, in fact, effective 1st January, I'll show you some people in Ghana. It is possible that you would start to see some persons also take on this role. So government has expanded the scope of the unpaid tax collectors, but at its fundamental level, a consumption tax, you are charging for your good or service. Government says add X% and then bring me my X% and take your money. So in simple terms, I'm selling something to someone for 1,000 cedis. Technically, I'll add 20% to it, right? Simple math. I'll charge what? 1,200. The 200 on top of it is for government. The 1,000 is mine. So every time you are charging for something, government says, give me percent. And you see, you are not eating into your own revenue. Far from it. Your revenue is yours. You are only adding something on top of government. Do we understand? This is for those who are not accountants here. You get the logic. Charge your money, add a percentage, and then bring me my money, right? And then for some input deductions, what someone also charged you, the legitimate ones the law calls deductible input tax, you can subtract them and then you remit to government, right? That is about it. Let's try to make the session engaging. I can't see your face and you can't see my face, kind of, right? So use the reactions. Look for the reactions. You can see, let me try. Thumbs up here. You can drop a heart. If you want to laugh, you can laugh. If you want to clap, you can clap. You can expand all the emojis. If you want to drop, where's the other one? The skull emoji, you can drop this one, right? There's so many emojis here. All right. So please feel free to use the reaction to let me know how things are going. So if you understand what I'm saying, you can drop a thumbs up, right? So back to what I was saying. For the non-accountant here, this is VAT. Charge your money, add my percentage, and bring me my cut. But before you bring me my cut, what somebody may have also charged you, subtract it and bring me the balance. This is VAT. Don't let any lawyer or tax consultant scare you. This is the law at its core. The rest is just complexity. Are we good? All right. So based on this, let's go to this. You may wonder, okay, if this is VAT, like why do we need a new law? Like what was happening? What was the issue? Did we even need a new law? The answer is yes, and I'll tell you why. In my view, and this is my opinion, strictly mine, the old Act 870 was becoming a patchwork of amendments. I'll show you all the laws. It was becoming a patchwork of amendments. Number one, consultants were struggling to catch up because you might think you have the latest law, then you realize that, oh no, this one has amended this and has repealed that. So Act 1151 has cleaned everything up. Today, everybody is starting on the same level. We can all pick that one PDF and we all know the same VAT. But sometime last year, I'll have an upper hand over many Ghanaians because I know what has changed. You don't know what has changed. But today, GRA has taken that away. In fact, consultants now, the general populace knows exactly what you know. They have the same law you have, technically, until they start amending again. So, consultants, your advantage is gone for a while because now the person who has done just law and didn't do tax in any case can pick the VAT Act 1151 and know what you know, right? And let me show you that. I'll come to that. But so this is designed for, like I said, a digital first economy, and it closes some loopholes which allowed massive leakage in the VAT system. So this is again my opinion. It was a patchwork of amendments. This one has come to kind of fix it. This is it. Can you imagine? Look at the number of laws here. There was 870 in 2013, then 890 in 2015, 904 in 2015, then 2017 they brought 948, 954, 970, 980, 1005, 1072, 1082, 1087, 1107, 1133. How do you expect the average Ghanaian to catch up? In fact, many people don't even know that some of them existed. So if you check, we had amended 13, 15 twice, we skipped 16, 17 twice, 18 twice, we did 19 once, we skipped 2020 because in 2020, COVID-19 was lashing everybody. So they didn't even have time to pass anything regarding VAT, right? So when COVID went small, then they resumed in 21. They did 22 twice, did 23, skipped 24 because 24, we were coming to vote. They skipped 24, then 25. When things settled, they came back again. So you can see when I say patchwork of amendments, this was what was happening, right? There were lots of amendments. Now this law has come to clear everything, and we are all starting from what the same level playing field. This is Ghana's VAT system as of today. Okay, do we understand the reason why we need that? Okay. Then another reason why the new law was needed was, if you ask me, our VAT in quotes was technically no longer VAT. Technically. Because VAT operates on this premise I spoke about here. This one. Outputs versus input. That is VAT. It's a value added tax. It is not a sales tax. Some regimes have a sales tax in their law, right? A pure VAT system, you have an output that you charge on your sales or your revenue or your turnover. You have some inputs that you incur on your purchases. The difference is what goes to government. If your input exceeds your output, you either have a credit or you go for a refund. That is VAT at its core, right? But what happened in Ghana is we got to a point where it became weird because we brought, first and foremost, VAT was computed on 3 other taxes. And I'm saying at least because this is at least VAT, this is the base for VAT. The 15% VAT was calculated on 2.5% national health insurance levy, 2.5% get fund levy, and the 1% COVID-19 levy. This was the old system, right? Secondly, these 3 taxes here were not even deductible as input. So first thing is that we had a VAT system where we were charging the VAT on a base that included other taxes. So it was actually paying tax on tax. And you don't want to imagine how it looked at the port, how it looked like at the port, the harbor. It was very ugly. If you imported something into Ghana, trust me, if the thing was even excisable, you take your CIF, you charge customs duty, charge excise or import excise, get a base, charge the 3 levies on that base, get the subtotal again, and charge VAT on that. By the time you brought something into Ghana, you would have paid VAT on at least 5 different taxes at the port. And this was just when you are important, right? So it was so complex. It was so weird. It kind of never really made sense. I'm putting a kind of there for political correctness, right? And it didn't make sense, right? Because we're paying VAT on other taxes. And that was the issue. That was the issue, right? So because the VAT was calculated on other taxes, you can see it. The base what is the 100 amount I'm saying you charge, right? And you charge all this and give to government. You were actually doing this, getting a subtotal and doing the VAT on the other taxes. Never made sense. And then on top of that, you could only deduct the VAT, not the levies. So people were confused. It was just weird. And to make matters worse, we even had to file multiple returns, right? Latest updates I have received, or they are yet to confirm in writing, is that we may have to file just one return going forward. Life has been made easy. So another reason why the change was needed is that what VAT was actually no longer VAT. Technically, what we were calling VAT in Ghana wasn't really VAT after all, right? Then let's come to what has changed. Because if I've said what the issues are, let's look at the key changes. And again, as someone who likes disclaimers, these are the key changes. It is not an exhaustive list. Well, let's just key changes, right? But to cover the important change in the law, if you know these ones, you are good to go from any other base that you may have. But a reminder, key changes, not an exhaustive list. So what has changed? The first one that I'm sure we are all happy about is COVID-19. So I've done a nice graveyard image for the COVID levy. Rest in peace. We will never miss you. Please never come back again. So from the year 2021 all the way to 2025, the COVID-19 levy existed in Ghana. From 2021 to 25, we had a levy called COVID-19. And you see, the COVID pandemic had left Ghana long ago. But are you aware Ghanaians were still paying COVID levy? Right? When did COVID leave us? Technically, which year? Like, let's say 2021, 22, it was going and it was gone, kind of, right? But yeah, we paid in 22, 23, 24, even 25. So as at last December, when you were out chilling, you bought that nice bottle of Coca-Cola or Pepsi or whatever, you were still paying for a pandemic. You see, it was actually called COVID-19 Health Recovery Levy. So I don't know if the recovery was for nation recovering. What were you recovering from, really? I mean, thanks be to God, the levy is gone. And like I said, good riddance to bad rubbish. Nobody is going to miss COVID-19. So please, update number one you should leave here with is what? COVID levy is dead and gone, right? You can go and pay your final respects at COVID-19's grave. Yeah. And I think that should be our update number one. Update number two is, and this one is very serious. It has far-reaching implications. And like, I am actually not kidding. The registration requirements are now very, very, very serious. In fact, extremely serious. In fact, overly serious. I don't know how to even say it again. Right? Very serious. Very, very serious. Very serious. So, guess what? This one is easy for anybody to understand. We are saying that if you are into the supply of goods, so you deal in tangible goods, tangible items, right? Generally, your threshold has increased from the former 200,000 to now 750,000 cedis for a year. Now, when we say threshold, what kind of threshold are we referring to? You see, it is a threshold for your turnover. It is not just turnover as in your revenue line. This is a place people get wrong a lot. Don't just pick your income statement or your P&L and say that this is my revenue. No, it is turnover of taxable supplies. Turnover of what? Taxable supplies. Meaning that there are some supplies which are not taxable. If you pick the VAT law, we have what we call the exempt supplies. You find them on the first schedule. So for those of us who are even non-lawyers here, like I'm saying, you and the consultant now have the same law. You are all equal, right? Go to the first schedule. You see a list of things over there. If something is listed there, it doesn't attract VAT at all. Meaning that if that is all you deal in, you may even sell 5 million CDs worth of it and you don't have to register. Practical example is what? Medical services. So if you run a hospital, and you don't do anything else apart from the hospital. You don't sell any food or canteen, whatever in the hospital. You give people injections, drips, you do surgery, treat malaria, have a pharmacy in there. Even if you do 5 million, 50 million a year, you are not registrable for VAT because you deal in exempt supplies. Are we clear? So the 50,000 is turnover for taxable supplies, the ones that are not exempt. Now it was 200,000 and it was for everybody. So as long as you were dealing in supplies, we don't care as long as they were not exempt and they were taxable, you were required to charge your VAT and remit to the government. Now, what has changed over here, like I'm saying, is that now those below 750, government is saying they should go and rest small. If you are below 750, you are seen as a micro business. Now, somebody may wonder, what happened? Is it that government doesn't want any more revenue? Government did the math and said that, well, since 2015, thereabouts, when we had our threshold change, and this one goes way back. We've started from somewhere and we are here today. I could go walk you through the history of the amendments, right, for the turnover. Now, so since that, it's almost a decade. In fact, it's a decade now, over 10 years now. Do you all agree that that car you could have bought with 200,000, in fact, 200,000 in 2015, come to think of it, you could have bought maybe these big Land Cruisers the ministers are driving. What do you think? I think so, right? Maybe an older one. But today, 200K, if you are not lucky, VITs if you get. Maybe you get VITs 2014 model. Corolla, forget, right? Camry, forget. Civic Accord, it will not happen unless the engine is spoiled. Where am I going with this one? You see, the idea is government is saying 200,000 back then is not 200,000 today. So the government is actually telling us that in their view, the worth of 200,000 today is 750,000, such that if you are doing 750,000, you are doing quite well. Come and register for VAT. So anybody below 200K, below 750K, is now going to leave the system. But don't be in a hurry to deregister. GRA guidance so far, they have said continue charging until Commissioner General comes to relieve you of your duty. Don't forget, those who joined early enough, I said you are an unpaid tax collector unless we collect your work from you. Unless we come and collect your work from you, please continue charging. Okay. So the first thing is that the threshold has gone up. But you can see I've also given a quarterly equivalent. If you spread 750K over 4, it means you are doing 187,500 every 3 months. But please, that is not the end of it. The law actually has two parts to this. It's 187,500 every 3 months. And you expect that by the time the year will end, you would have crossed the 750. So if in a 3-month period, you have done 187,500 and you expect to cross by year end, then hurry up, run to the nearest GRA office and register for. Are we good with the supply of goods? So it means that if you are above 750K, nothing changes for you. So let's say your turnover, your revenue for the year is 1 million CDs. Nothing applies to you. Nothing changes because you are already above both the old threshold and the new threshold. But let's say your revenue is 400,000. You are caught between the old one and the new one. 400,000, you were actually above the old threshold, and now below the new one. Revenue Authority is saying that, hold on, wait, they will sort you out. It means this month of January, go and charge your VAT as you are making supplies. So far, that's what we've been told. Your take point is that deregistration is not automatic. Don't say that you have heard that a threshold has gone up, so you've stopped. they will give you a punishment. Again, it goes back to what we started. I said, you have been appointed, you've been given a special role, paid tax collector. Continue your work until they terminate your, in quote, appointment. This is supply of goods. This one is even comics. It is cartoons. I'm coming to the bombshell, which has serious implications if you really think about it very well. Of services. Guess what? There's no threshold for supply of services anymore. The old law said 200,000 goods and services. I'll show you something shortly, right? Meaning certain service providers who were actually under 200K did not have to register. I cannot even wait to show you. So let's even come to this before I finish. So you see this list over here. The barber cutting the hair, the guy washing your car at the washing bay, the lady beating up your face for your wedding, nice makeup. And you see those who walk around cutting people's nails, and I don't know why people patronize them anyways, despite the risk. But yeah, people still use them. These guys are all service providers. The law is now saying there's no threshold. So if this guy here, we can call him person A, makes even 6,000 cedis a month, GRA is saying he's now registrable. That's what I'm saying. The law is interesting. They've removed the threshold. But of course, the way VAT works, it is like this. You apply and Commissioner General can say no to you. One of the reasons why you can be rejected is when the law says when you're not a fit and proper person. So maybe do check the guy's dress and say, Chairman, go and cut your nails in peace. You have been permitted. So Commissioner is saying that unless he tells you you are not part, please, you are part. So what should we expect? If you go to get a haircut, the guy's here, the guy who has been charging you 6 cedis, please, he may start charging you 6 cedis plus 20%. The lady, when you're going to fix your eyelashes, you are going to do some makeup. Don't complain if the makeup charge goes up. Those of you who drive here, when you get to the washing bay, if you're when they wash your car, they can take maybe 20 cedis, 25, 30, based on where you wash. Please, if they tell you that the car wash that cost 30 cedis is now 36 cedis, don't shout. The extra maybe VAT, right? Because now they've said there's no threshold. It was easier for people to hide. Let's come back here. It was easier for people to hide under the assumption that the law says 200,000 and above. I have not met it. And they are sole proprietors. Can you see their P&L? No. Do you agree? So it was like, okay, I've not met 200,000. Leave me alone. Now the law is saying that there's no threshold. So it's going to be interesting this year. But I expect GRA to come up with guidance. But it's going to be an open law. Are there particular service providers who should not register? Is it open? And again, when we started this session, I said, this is my opinion. It doesn't reflect GRA view at all. So are we going to see all the people I showed you registering? Or will Commissioner come and give us some further guidance? But as it stands now, every service provider must rush to the nearest GRA office and go and register, effective this month. So if you've made any service provision, those who are event organizers, if you have done some wedding bid this past weekend, you are owing VAT on that, going by the law. We don't care how much you make a year anymore. This is the implication. That's what I'm saying. This is the most serious one. It brings every service provider into the net, right? Think of people on social media. Think of, what is this guy's name? Those hype men at concerts, Paradise and the rest. They are all service providers. They must start charging. We don't care what your threshold is. Sorry if you don't know Paradise, right? Maybe it's just a generational gap, right? But if you follow social media a lot, you know those hype men. They are all, in fact, bouncers. Those of you who go to these nightclubs and events, the bouncers are service providers. They are not employees, right? They must also start charging VAT to the nightclub. It's going to be an interesting number of months in Ghana until we get guidance. So what does this mean for service providers? All suppliers or providers of non-exempt services must register for VAT. And I'm saying non-exempt because there are some services which are exempt from VAT. Like I said earlier, medical services. That's one example. Education services, right? There are some specific services which are what exempt. So if you are not on the exempt list, please hurry up and go and register based on the law. You have 30 days, and counting by the law became effective 1st January. So by 30th of this month, you should have registered. If not, you may be in trouble with the Revenue Authority. Are there any other key changes? Yes, there are. So in the old law, promoters of public entertainment, they had to register regardless of their turnover. So let's say you are hosting an event. Think of the Telecel Ghana Music Awards. Think of Rapaholic. Think of Promised Land, where they were selling tables for 50,000 and above. Think of whatever rave they've been, Tidal Rave. Think of Shatterfest. You name it. All those events, right? Ghana's Most Beautiful, Miss Malika, all those events, right? Usually, the organizers were required to register for VAT 48 hours before the event. That is, if they were not registered. But the law gave them a 10,000 CD threshold, meaning that if, let's say, you are doing an event, let me give an example. Let's pick an underground artist in Ghana. Let's use Archipelago, right? I'm sure nobody will go to a show. So he, like this, maybe when he sells tickets, he won't cross 10,000 CDs, right? Again, it's just a joke, right? Okay, so you can use Palago, you can use Patapa. Those guys, they'll do an event, people will not go to them. We are saying that if you did not meet the 10,000 threshold in the past, you are not required to register. Do you know they have deleted it now? Meaning that if Archipelago and Patapa do an event and only 5 people go, they must still register for VAT. So they have opened. So you can see for services, and this is just so we can all remember all the examples, right? For services, the lawmakers have opened it up to a lot more taxpayers. Remember, the 10,000 Ghana cedi threshold is gone, but the 48 hours before the event requirement is still there. So now all promoters must register regardless of the event size. Then the next one, this is a subtle one. The old law kind of mentioned that national, regional, local, or other authority or body had to register for VAT 30 days after they have started a taxable activity. They have impliedly removed that voluntary registration. I don't want to believe it means they are exempt. Are far from that, right? So this doesn't have any true implication. It's just making the law neater to read, right? So because they are even doing services anyways, most of them, right? So if you meet the threshold, go and register. If you are a service provider, you are doing services, register. So it makes it easy. Then now the law has also added one more thing, right? Which is commissioner is now required to what? Notify you if he will not register you. The old law was more like if commissioner doesn't get back to you, assume he has said yes. But the law has clarified now that if he is going to not register, he will notify you. And like I said when we started, please, you can see I've removed all section numbers here. I could have easily done section, this subsection, that this is for the non-accountant so that they can also follow. Because when they see sections, they'll start getting scared. Now it is English, we can all read. Agreed. All right. So if you want sections, we can talk about them later. So like I'm saying, commissioner must now give a notice of rejection of registration generally, right? Okay. So for the service, like I was saying, without a service registration threshold, now all service providers based on law are registrable unless commissioner says otherwise. You must register. So those are the changes so far. Those are the changes so far. Give me a sec. All right. Let's now come to another change. We had what we call the VAT flat rate scheme. There were 2 sub schemes under the broader scheme. We had the 3% VAT. So when you see VFRS on the screen, it means VAT flat rate scheme. Now, these persons, I'll show you their calculation. Don't worry, okay? These persons were required to charge VAT either at 3% or 5%. So they left the 3% VAT for those who were retailers who had a specific turnover between 200,000 and 500,000. So if you were within that threshold, you would do 3%. And then you add the COVID-19 levy that is now dead and nobody will miss, right? Then we had the 5% VAT, which was for the estate developers and real estate companies. So if somebody is selling a property, for example, right, they would have charged 5% VAT plus a 1% COVID-19 levy. So as it stands now, the VAT flat rate scheme no longer exists. It is dead and gone. Standard rated now applies to all former VFR. So in case your question is, okay, if flat rate is gone, what is the next impact? The next impact is everybody who was flat rate is now standard rate. Of course, threshold will matter if you are dealing in goods because these guys are goods, right? Predominantly goods. So if you are into goods, like I'm saying, and let's say you were doing 400,000, which is between 2 and 500,000, you are now in between. Wait for Commissioner General to deregister you. But until then, you are going to charge the standard rate VAT on all your supplies. That also means that the full input output mechanism also applies. In the past, the flat rate guys could not deduct input tax. They could not. Now everybody can. So let's use numbers. It will make everybody's life quite easy, I believe, right? So for flat rate should be here. Okay, yeah, we'll come to that. So let's look at the next one, which is input tax deductibility. We'll come back to the flat rate. Another thing that has changed, apart from flat rates leaving entirely, it's now dead and gone. There's no flat rate ever, ever, ever. Input tax deductibility. You know, when we started, I said you add something for commissioner for GRA on what you are selling. We call that your output, right? Then when you buy from somebody for your business, you also pay somebody VAT. It's a chain. That is your input. Now, under the old law, some inputs were not deductible. So we will start with what? Under Act 870, the 2.5% National Health Insurance Levy, the 2.5% Get Fund Levy, the 1% COVID-19 Health Recovery Levy, all of them were not deductible. This has now been repealed, like I said. Then the VAT flat rate scheme, they were not entitled to any input tax deduction whatsoever. We don't care what you were doing. Once you were flat rate, you could not deduct input at all. Then even those under the standard rate, only the 15% VAT was deductible as input. Like I said when we started, the levies were still not deductible. This was so complex. Under the current regime, the 2.5% National Health Insurance Levy, 2.5% Get Fund Levy, then COVID is gone, so 15% VAT. They are all now generally what? Deductible. Of course, if the right conditions are met, because the law has specific conditions on input deductibility. Not to go into those details, that is for those who want to go further. But generally, your levies and the VAT, they are now allowable as an input deduction. I'll show you the numbers, how they are looking like. So this is the VAT flat rate. Like I said, it is gone. This is how the computation was. So under the old system, this is the 3% VAT flat rate scheme, the 5% VAT. You charge, let's say you are selling something for 10,000 under both. You charge VAT 3% of 10,000 is 300, 5% of 10,000 is 500. Then you charge a COVID levy of 1%. So 1% of 10,000 is 100. 1% of this is 100. Then your total tax is 3 plus 1, 400 cedis, 5 plus 1, 600 cedis. So something for 10,000 under 3% flat rate would have been sold for 10,000. Something for 5% or under the 5% flat rate for 10,000 would have been sold for 10,600. This is the old VAT flat rate scheme. Under the current regime, there's no flat rate. So that same 10,000, once you are still registrable, you are going to charge your 10,000 base amount. You charge National Health Insurance Levy, NHIL 2.5%, Get Fund Levy 2.5%. You can see they are all on the 10,000, all on the 10,000. Then you charge your 15% VAT also on the 10,000. So technically it is 2.5 plus 2.5, making a total of 5% plus 15, giving us 20%. So now in total, you are going to pay an amount of 2,000 cedis in taxes, 250 NHIL, 250 get fund, 1,005 VAT. Then everything becomes 2,000 in taxes plus 10,000. Then you collect 12,000. So when we started, I said, government is saying, put this 2,000 on top for me of your 10,000. Collect 12 from your customer, take your 10, give me mine too. Do we understand VAT? This is it essentially. So all those under flat rate, they are now going to do this new calculation. All those under flat rate are going to do this new computation. So this is update number 1 for the flat rate system. Update number 1 for the flat rate system. Let's move on to the next, which is, let's do some small legal analysis here. So for the non-lawyers and for the non-accountants, I have put some things in brackets to also guide you, okay, so that you don't get lost in the English. Now, if you read the law, the current VAT law, when you go to, I said I won't put section numbers here. The non-accountants, forgive me, okay? It won't happen again. All right. So when you take the current law and you go to what we call section 44, all right, it is going to look at what we call the value of supply. Now, that section 44, value of supply, when you take the old VAT law, that is Act 870, you would have seen it under section 3. Okay. So again, that is one example. For the accountants here, I've done my analysis. All sections that moved, the ones that were merged, the ones that were split, right? But of course, this wasn't the right platform to scare non-accountants. So this is just one example of many. What they did in the law is that they actually split some sections. So some sections are there. They were formerly one big section. Then they broke them into 2. Some were broken into 3. Some were even merged. Then they added some new section and deleted one section in total. So the new law has more sections than the old one because of this restructuring they did. Are we good? Let's come back to this. So let's read the law together so that we know how they used law to end the tax on tax system. So the law says the value of a taxable supply, meaning the base on which you charge your tax, right? That is your VAT, okay, is the amount of the consideration. Here is how much you charge for a good or service. So in this example, it's a 10,000. Okay, good. And when the law says and, it means plus. So plus all means all duties. So every duty collectible in Ghana, and taxes, all taxes, excluding, read excluding here as without adding, because this is plus. Without adding, the law says VAT, get fund levy, NHIL, tourism levy. If you read the law carefully, this is what the law is saying, that the base for the tax is now the consideration plus any duty, any tax, excluding VAT itself, get fund is out, NHIL is out, tourism levy is out. I'll show you the calculations based on this new structure. Now, what this means is that you can see I've put a little note here that, well, communication service tax is a tax. So if they didn't list it here, then they mean it should be part of all fees and taxes. Do you understand? In the same vein, import. So the accountants here wondering, what about when I import goods at the port? Import duty is a duty, and the law says it's consideration plus that duty and any tax. So it means technically, for those who know how it is done, you still do your CIF, charge duty on CIF, get CIF plus duty, and that becomes the base for VAT. But you won't do the old computation where you were doing the levies on CIF plus duty. Again, this is for the technical people here, right? Let's come back to the average Ghanaian. We are saying that the value of the tax is the consideration plus every duty, every tax not listed here. And of course, duties and taxes, as mentioned here, they are the ones administered by Commissioner General. So the fact that something may be called a tax, don't go and be adding property rates Don't go and be adding any fees and rates collected by a local government authority. No, these are the ones administered by Commissioner General, right? So it's a consideration plus any duty and tax not listed here, excluding without adding VAT, Get Fund, and Hill Tourism Levy. Therefore, the base for calculating has also changed. And we have done what we call a decoupling of the levies, right? Decoupling here simply means what? A disentanglement. Why am I using big word for big word? Separation. Okay. In an attempt to simplify decoupling, I said disentangle. So I meant to break apart, to split. In the past, we had merged the levies together, right? And what happened was that the computation was very complex. Let me show you what it looks like. So this is a summary. So today, when I'm done, I'll do a side-by-side table for you. This is just like a summary of everything, okay? Today, this is how it looks like. If you are charging standard rate only, it is 2.5% N-Hill on the 100 Ghana, 2.5% Get Fund on the 100 Ghana, 15% VAT on the 100 Ghana. You get 2.5, 2.5, you get a 15. Add these three guys together, I get 20 CDs. Add the 20 to the 100 you are charging, then you pay government 120. Again, going back to what we started with, 100 is your money. Government says that, Charlie, add some things on top and bring it to me. So the things on top, we now have a simplified way of calculating. You charge levies, charge VAT, all on the same 100 base. That is the current approach. Then the next one is VAT standard, where there is CST, like something that MTN will charge you when you buy your bundle. So in fact, when you buy your data bundle, how much you pay to them is inclusive of tax. So they work back. They work back and then they get the exclusive. And of course, the accountants here, you understand what we call revenue recognition under IFRS 15, right? So MTN has a way they book the revenue as and when each performance obligation is what satisfied, right? So when you buy, let's say, bundle, it's not like they just charge everything. No. But again, this is not the avenue for that. Back to simplicity. So when you have a base of 100 CDs, you will now charge the communication service tax of 5% on the 100 and get a base for the VAT and levies, because what did we say? The value of the supply is the amount of your consideration plus every duty and tax not listed here. Do you see CST listed here? No. They mentioned VAT, Get Fund, and tourism. Therefore, I am putting CST under tax. So coming back to our table, if the amount of the consider or the base is the same for the levies and for VAT. So this is the logic. If the levies and VAT, that is N-Hill, Get Fund, and VAT, should all be on the same base, and we've been told that base must include every duty and tax not listed in the previous slide, then communication service tax should be there. So in a funny way, tax on tax is not really gone. Just that the person suffering now is CST. And I think this could have been easily fixed. Again, my opinion, no, please don't quote me anywhere, right? This could have been easily fixed by adding CST here. Then it is simple for everybody. So now CST, 5 on the 100. What do you think? 2.500, 5 on the 100, 2.500, 15, then we are done. So now what is all this? If you are indeed simplifying something, then do it. Don't do some and leave some. Because now, as it stands, it is 100. You do communication service tax on the 100, get your 5, get your 105, and then get a subtotal. Then the 2.5 105, 2.5 on this 105, then 15 on this 105, then you sum and get 126. Technically. Now here, let me mention some small mathematical nuance. Someone should pick their calculator and then sum the numbers you see on the screen. Sum the 2.63, 2.63, 15.75, and 105. What do you get? The numbers you see on the screen. Sum exactly that. You can type in the comments what you get as a total. So 105 plus 2.63 plus 2.63 plus 15.75. Or just pick your phone and then You can check for us. Yes. Is there any comment? Okay. So you guys are type. Okay. No, no, add the 105. You see, you get 126.01. Have you noticed? 126.01. So why am I leaving 126 over here? Now let's do the math. Do you know? Okay. If you are not a math person here, sincere apologies, but I'll carry you along. Okay. Do 2.5% of 105. So 0.025 times 105. Do you notice you get 2.625, not 63? Are you aware? But on your invoice at wherever you are going, they round off. Ghana CD and Ghana pesos is two decimal places. So when you round off, so my computation here was done in Excel and it added the full numbers. That's why we got 126. So my point is, if you see anybody saying 126.01, they are not wrong. They are adding the rounded figures together. So there's an effect of 0.01. Do you understand? Just in case anywhere else you see somebody quoting 126.01, they are not really wrong like that because they are adding the what? The surface level. What this means is that this one is all about your accounting system. You see the way I did it nicely and we didn't get a 0.01. I did in the computation and I added the source figures. In Excel, you can do that. You can round on the face of it, but add the source figures. So someone can also do the math. Do 105 times 1.20. You get 126 on the dot. Try it. 105 times 1.2. Have you noticed? Calculate, take your phone or your calculator. Do 105 times 1.2. You get 126. Yes, that's the correct one. So it means on the face of it, when you are punching on your calculator, this is the correct one. But I'm saying let's be careful. If you see the rounded figures, they are not wrong. They are really just adding the amount. And you know the way this thing works, government will not complain. They are getting extra 1 peso, so don't shout. If they are the ones rather being cheated, then they'll have an issue with it. So you may get an extra 1 peso charge based on who is charging you. Just saying, you may get an extra 1 peso charge, right? But it shouldn't happen if the calculation is done right. So that is it. And we have the next one, which is VAT standard plus tourism levy. Tourism levy is where next time you go out to eat, okay, check. Unless it's a chop bar. Just saying. Right. So unless you go to chop bar to eat, no invoice. In fact, they said they have to start charging VAT. Right. Okay. So standard VAT. Let's come back to our list here. It says excluding tourism levy. So it means VAT, Get Fund, NHIL, tourism. They are all not going to stay in the tax base. Therefore, if you have VAT standard with tourism included, like you've gone to a hotel, then it's the same approach. They will charge NHIL 2.5 on the 100, Get Fund 2.5 on the 100, 15% on the 100 VAT, then tourism levy 1% also on that same 100. You add everything together, you get your 121. Are we good? Now it has been made very easy for us, right? It is CST who has an issue at this moment. But I would have said they should amend and then make life easy. But once they start amending, then we'll go and see the first table I showed you again, right? But trust me. The way Ghana is, before this year ends, we may see one amendment. I'll be shocked, by the way, because like you spent all the time bringing everything together. What part do you want to change that I couldn't change, right? But it's a matter of time. Give it 3-5 years. We'll go back to that system. That's Ghana for you, right? So this is the era of simplicity. Let's look at a side-by-side calculation. So I'm going to pick VAT standard, old versus new. So this is the old one. So if you check, this is the old one. You can see we're doing 2.5 on 100, 2.5 on 100, COVID on the 100. We got a subtotal of 106, which is this plus this plus this plus that. Then we charge the VAT on this. So 100 CDs, you'd have got 121.9. The new one, simplified. NHIL 2.5 on the 100, Get Fund 2.5 on the 100, COVID abolished, so it is gone. The VAT base is still 100, 15% VAT 100. Then you get 120. So technically, there's a saving of 1 CD, 90 pesos at the end of the day. but like the old system, the new system, right? You save one CD, 90 Ghana pesos. It is not money, I know, but start selling items in hundreds of thousands. You realize it becomes money all of a sudden. So don't look at it from the, oh, it's just one CD. No, someone sells thousands of goods every week. Yes, when they do their math, it adds up quite quickly. Okay. So before you say, oh, one CD per, it's not per. Wait till you see someone who is a big, big dealer. Okay. If you multiply this by 100,000 goods, it becomes 190,000 CDs instantly. That's a lot of money, right? Yes. So I think it's a welcome change, right? The next comparison will be VAT standard with 5% CST. So again, that one, the old one was 100, you do 5% on this. The levies were still on the 100. Again, it looks complex because I'm trying to compare. So please, you can see we have more word here. The simplified one is this. This is a simple one we should all look at, okay? All right, so back to this. So the levies were still on the 100, right? So 2.5 on the 100, get fund 100, this 100. You get your 111. You charge VAT on VAT, I mean the value plus CST plus levies. Then you get 127. Today, what it looks like is this. Like I said not too long ago, you charge your CST at this. You can see I've highlighted this one. Now the value plus CST is the new base, right? And then you charge the levies on this guy. So 2.5 on 105, 2.5 on 105. COVID is now dead and gone. So we clear this guy. You get your VAT, which is still on that same 105. So you can see that for CST, funny enough, we still kind of save one CD, 65 pesos, despite the computation. But maybe the savings could have been more if they left out that extra layer. Let's do the math. If we add 5% to levies are also VAT is 15, that would have been 25%. Yes. If they didn't do this sub calculation here, we may have done 125 Ghana cedis. So maybe we would have done 2 cedis, 65 pesos. That's extra 1 cedi we could have saved, right? It's not money, but it's money. Okay, especially when Ghanaians are always saying my bundle finishes fast. Yes, that small 1 cedi could have made you browse on Facebook or TikTok to watch one more DWP Academy choreography, right? But now you have been shortchanged by just small, but at least it's better than before because you are going to get value of 1 cedi 65 pesos on your supplies. Yeah. So this is VAT standard with the 5% CST included side by side. And tourism levy. So tourism levy to not much change apart from the cascading. So you can see we're doing N-Hill, Get Fund, COVID, got the base, charge VAT. Tourism has always been on the 100. That has not changed. Tourism has always been on what? The 100, right? In the old law, it was based on interpretation. Now they've made it clear. Okay. So total payable under old was 122.9. It's now 121, still saving like 1.9, right? Because COVID is gone. We're not doing tax on tax anymore. So this is how it looks like, right? Then the next one is a legal architecture overview. If you are not a law person, you can close your eyes. We now have 75 sections compared to 66 roughly. And 66, I'm counting all the ones that are something, something A, something, something A. Those sections, they are all one section, whether it's section something A, right? It is still part of the main. So roughly 66 with 5 schedules. We still have 5 schedules, but 75. So more sections now. And like I said, a lot of movement has gone on here. We have seen some merged, some moved, and all of that, right? So that is how it looks like, right? Okay. So we are now going to look at some specific details. I'll take questions at the very tail end, okay, so that it doesn't disrupt like those who want to listen. So we would look at some key additions, deletions, and amendments. This part is for those of you who are quite technical, right? Like what is the law actually, apart from all these things you've probably already heard before. right? So the first one is the taxable activity scope has been expanded. So now the section on taxable activity has made it quite clear, right? That now the scope for taxable activity, which by the way is still section 5, right, has now brought in to the scope natural resources for exploration. Certain traditional exports have also been listed. The old law was non-traditional exports, but certain traditional exports have now been clearly listed. The old law merged gifts and loans of goods. Now they split gifts and loan as separate line item. So a gift taxable, loan of a good taxable. Not loan as in money, just to clarify, right? If you give something out to someone with no consideration of it, it's still a taxable activity, right? But now I'm saying that they've kind of like them under the taxable activity. Next is the sanction for failure to register. Commissioner is not playing. Do you know the old law said if you don't register, your penalty was not more than 2 times the tax payable, meaning that they wouldn't have punished you more than twice. Guess what? Now your penalty is not less than 3. Let's do semantics, English language, okay? This one is basic English. If someone says not more than 2, do you agree it means they can't exceed 2? But you know, not less than 3 means I can do 100 and I'll still be not less than 3. Are you aware? Oh, let's clarify. Let's clarify. If I say something will be not more than 2 times, it means I can't cross 2 times, right? But if I say something will be not less than 3, it means that if I do 1,527, 28, it is still not what? Less than 3. Now, so I'm saying here that the punishment floor is now higher than the old ceiling. So now they want to mafia those who don't register. So if commissioner sees you have not registered, all the tax you should have paid, they can say, hey, this guy multiply his own by 50. This guy multiply by 100. This guy by 1,000. The law has given commissioner now power to mafia Ghanaians who decide not to comply. The old law was more like, oh, if I don't register, crack, what's the punishment? ×2, I can pay. Now they are saying if you like play. If they catch you, they can give you, and this is supposed to what? Give commissioner more power to enforce. So please, that barber who is cutting hair, that beautician fixing lashes, if you don't register, they'll just go on your social media. In fact, some of these people, they do social media, whatever, the photographers, they'll go to your event, they'll count the weddings. Wedding number this. You come and post, we celebrate Mr. and Mrs. this, they'll count, hashtag this, then they'll calculate. Come and let's talk. You've had 15 weddings over the past 3 weeks. Come and let's talk. How much did you make? Or do estimate for you? Then they'll find the VAT and then they'll multiply whatever they want to. Right? So that is the penalty. Right? They have reworded it kind of. Okay? Not less than. The next thing that we must also know has changed is that the upfront VAT for importers. Now, this is for those who were importing goods into Ghana, which were above the taxable threshold of 750,000, former to 200,000, but were not VAT registered. They were being made to pay 12.5%. And you see, again, that was a gap in the law because the 12.5 was meant to match then VAT 12.5. When the rate went to 15, they should have changed it to 15, but they left it. It happens. It's one of those things in life. So now they have aligned it again because you were technically paying VAT for not being compliant. The accountant here, do you get the logic? The old rate, old was 12.5. So when they should have made this 15, but the upfront VAT for importers was 12.5. Now it's 20%, right? So now if you are an importer and you don't comply, you bring goods which are registrable. You are going to sell the goods. It is not for home use. It's not for personal consumption. And then you are not registered. You check your customs import declaration on ICOMS, right? When you get your declaration, you see that they've added some 20%. It is simple. Once you register and file all your outstanding returns and pay all outstanding taxes, GRA says, come and apply for refund. We'll give you. But we all know GRA, right? They'll now go and check. Are you owing us this? This guy is owing. Go and check. They'll deduct everything you owe before they pay you the balance. But on the face of it, the law says, once you register and pay, come for your money. right? So please note the upfront VAT rate has also gone up. Then VAT invoicing has seen some updates. The first one is that, in fact, if I read the law now, it is explicitly stated that a fiscal receipt issued under Act 966, sorry for the non-legal persons here, Act 966 is a law that was passed in 2018, the fiscal electronic device. It introduced that, right? Now, government intends to enforce the FED this year. So the law has been amended. VAT law is now saying that any fiscal receipt that is issued using the FED qualifies or satisfies the invoicing requirements under the main VAT Act, right? So that we don't have duplication of functions. And this is the funny one. They said there's a reward scheme. So invoice numbers can be put into a lottery or raffle to get rewards. This is supposed to encourage people to collect their invoice. So it's like you go and buy something from a shop. The shop owner doesn't give you your VAT invoice. You complain. You'll be like, Chairman, I beg you, let me get my invoice and go and put it in a raffle. I may win TV. I may win iPhone. I really want to see how that actually goes. But you can see they are doing this to encourage compliance so that more Ghanaians, because typical Ghanaian, if you hear that, you can go and put this in a raffle. What I even suspect is that people will go to shops and be picking the VAT invoices that people have thrown away. Let's see how because typical black man who has picked mind will now say, if I have more invoices in that raffle, right, let me just drop it in and then they'll do raffle. So maybe the person will be winning iPhone, flat screen TV, a car, but let's see what they'll bring. I really hope their prices will not be GRA calendar and diary and toothpick. We want to see correct, reward. So let's see, right? I'm sure they'll announce the modalities around that. But the idea here is that they want to incentivize Ghanaians to collect invoice so that you can put it in some raffle or some draw where you can win some nice prizes. So please note that is also something this law has changed. Then we are not done with the changes. VAT refund or credit. So those of you who are familiar with how the law was structured, there are some persons who can apply for a refund. Not to bore you with the technicalities, we have those who are exporting 25% or more of their output, and they had repatriated the export proceeds through their authorized dealer bank into Ghana. Theirs is there. The old law also added zero-rated textiles. So the textile manufacturers could also apply for VAT refund, right? But now they have added the locally manufactured sanitary towels. So this is just like alignment of the old law, because the old law listed the sanitary towel manufacturers, the local sanitary pad makers, as zero-rated. They've now brought everybody under this. So it means that locally manufactured sanitary towel makers, they can also apply for refund eligibility, just like the textiles people. Then now the law has clarified that for persons, right, who are relief, their mechanism is clarified. It was in the LI, the regulation, but they've now made it clear. You pay, you get a refund. So now it has been brought under the section for refunds quite clearly. Then this is a very welcome development, exemption from withholding VAT. You see, the way under Section 116 of the Income Tax Act, apologies for mentioning section number, non-lawyers here, right? I keep forgetting. So under the Income Tax Act, okay, you'd notice that there was a provision where if you want to be exempted from withholding tax, you apply to commissioner. Commissioner will give you under the Income Tax Act. VAT did not have that. Now they have introduced it. So it means the same way you could have applied for income tax withholding exemption, you can now also apply for withholding VAT exemption. Okay, so you apply, commissioner will exempt you, meaning that for the finance officers here, the way when you are sending out your invoice, you attach that letter from GRA that tells the person that don't withhold on me because I have this letter from GRA. Those in practice, you've all seen those letters, right? Good. We will start seeing 1, 2 for VAT. So now your invoice might have 2 attachments. One saying, commissioner is saying, don't withhold on my income tax. The other will be another letter saying that, okay, don't also withhold on VAT. As to if they'll do it 1 letter or 2 letters, we are yet to see, but it will most likely be 2 because they're under different laws. But let's see. Let's see, right? Let's see how that goes. So please just know that now you can actually apply. This will help cash flow management. Those of you who cannot stand your 7% being locked somewhere, you can what? Get your money up front and enjoy your cash flow as a business. This is a good initiative. They've changed that in the law. The FED, that is a fiscal electronic device, the law has now also made it clear that any returns that you file through the FED is statutorily recognized, just like what you file on the GRA portal online. We are yet to see how they will roll out the FED, but they've made provision. So if you are filing returns, I haven't seen how they will do it, but the FEDs exist. In case you are wondering, a large part of East Africa currently has FED systems in place. Right? In fact, we copied from them, we learned from them. Many of our initiatives, withholding VAT came from, I won't say came from, but East Africa, Kenya, Uganda, Tanzania, they've been doing these things for a number of years now, right? So now, if any returns are filed through FED, we are going to recognize them as legitimately filed, just as would have been done on the online portal. Then, evasion of tax, commissioner is not saying again. Like you can see that that meme we see on social media, wicked mode activated. This law has a lot of those, like low key. You can see there's a lot of wicked mode activated. Let me show you the first wicked mode. Look at this one here. Now, if you don't register, the least I'll lash you with the taxes, not less than 3. Then now they are here, they said that the mandatory minimums. So now they are saying not less than 2 times and not more than 3 times the tax evaded, right? And then for prison, not less than 2 years and not more than 5 years. So the old law was quite relaxed in terms of its approach. Now it's more like if we catch you, if you evade VAT and catch you, like you are going to prison, you not go 2 years. The old law was relaxed. So the judge could have said, oh, let's give this person 1 year, 2 years. Now they are saying that you not go inside 2 years prison. And then the fine minimum. So they've made it more rigid. So this one has removed, in my view, the judicial discretion to be lenient, right? So now if you are convicted, it guarantees at least double the tax fine or at least 2 years in jail, right? If you read the old law, the wording was more relaxed. They have strengthened this in line with what I say, the wicked mode activated regime, right? Okay. Then a few other things that have changed. Exempt supplies. So lottery and betting has been removed. So when you go to the fair schedule, the list of exempt supplies. So a stake in the national lottery, a stake of betting, all of these are exempt. Now they've taken it out. The implication is now that betting and lottery should become taxable supplies again, right? We are yet to see how to enforce this. I'm actually interested in to see how to do this, because they took 10% withholding from the investors. So the investors, you know what I mean when I say investors, right? Those who stake sports bets. The investors were freed of their 10% withholding, but investors might see, it's not a tax the investors will pay, by the way, but it's something the sports betting companies would have to charge and then remit to GRA. However they'll do it, right, is yet to be communicated. But just know that betting and national lottery is no longer exempt. Then the old law also used to exempt management fees, which were charged for the management of a private equity, venture capital, or mutual fund. This law has also silently deleted it, meaning that management fees charged by these venture capital firms, the mutual fund firms we all invest with, their management fees should now be vatable, no longer exempt. Then they did some rewording. I just 2 of them. There are a number of them. So electricity, the old law is what I've cancelled. A supply of electricity to a dwelling. They've left this one. They cancelled this one. Up to a maximum consumption level specified for block charges of lifeline units, meaning that they gave exemption for VAT on electricity up to a certain threshold. Now they say every electricity to a dwelling is exempt. Dwelling is residential premises where people live with their families and whatever, right? In simple terms. So if our right to a dwelling is now exempt. No, some part is taxable, some part is exempt. Electricity is now what exempt. Everybody should go and sit somewhere. They've made it easy. Then one that I only added because I found it funny, not because it's the only change. The other changes. They said the old law says the supply of mosquito nets, whether or not impregnated with chemicals. The lawmakers have started and said, the impregnated, maybe people will not understand. So they've changed it. See, no trouble. Now they've made it infused. If you read the schedule, they've changed the impregnated because somebody who does not understand the use of English language in broad context will be like, how can mosquito nets we put on our bed become pregnant? So they said, you know what? Impregnated, they actually meant they have put it in those chemicals to make it very strong. Now they said, Charlie, let's make everybody's life easy. It is now infused. As for infused, you understand, right? Yes. So that's one extra thing that caught my attention. I said, let me just drop it here. But there are a few other rewordings they also did in the law. Then for zero-rated supplies, the Ghana Automotive Development Policy, and this is something I really don't know why they did. So under this, though, we are trying to get people to buy assembled in Ghana cars, made in Ghana. I wouldn't say made in Ghana. We don't make cars in Ghana. Right, we assemble cars in Ghana. So we're trying to get the assembled in Ghana cars to be zero rated, meaning that if, let's say, you are buying a Toyota Corolla or a Camry, if you import the Camry, you pay import duty, import levies, import VAT, or the ECOWAS levy, blah, blah, blah. If you bought the car in Ghana, number one, the kits are, we have the semi knockdown and complete knockdown, right? The kits that those people bring into Ghana, under the fair schedule, they are exempt. So the kit will be exempt from both VAT and customs duty. Then when they sell the car in Ghana, they charge VAT of 0. So the logic was that if I bought a Corolla assembled in Ghana, it should have been much cheaper than the Corolla bought outside Ghana. Funny enough, this had a sunset clause, which means there was a time by which it should have ended, right? They did not extend it. So it kind of also died quietly. So the implication is that locally assembled vehicles, if you ask me, based on the law, they should start charging 20%. So charge 2.5 get fund, 2.5 NHIL, 15 VAT. Then textiles manufacturers, their zero rating should have ended December 31st. That is roughly like 7-8 days ago. Right? They have extended it again for them to 2028. Yeah, I'm saying that just make it like the sanitary towels. Then we know that you've left it, right? Because this is not the first time, this is like the third or fourth time. Like the time comes and they extend again. Time comes, they extend again, right? So they should just leave it if they know they were extending again, right? Locally manufactured textiles. So if you make textiles in Ghana, zero rated means you charge VAT, register for VAT, you file returns, but your rate you charge is 0. Before anybody asks later, let me give the answer up front. If VAT is zero rated, the levies are also zero rated. My favorite analogy is that VAT and the levies are always like Liverpool Football Club. You never walk alone. So if you are charging 0 VAT, think of Liverpool, right? If VAT is 0, levies must be 0. You can't have technically like levies being chargeable than VAT. That's the thinking, okay? So think of VAT, think of Liverpool. I don't follow football that much, but I kind of heard that life is lashing Liverpool of late, right? May the good Lord be with them. So please remember that they work together, right? And they have extended the zero rating to 2028. Then another thing on zero rated supplies, this one is interesting. So they deleted services to the extent that they are consumed elsewhere than in the country. This was based on the destination principle. So any service headed outside Ghana, right? They left some of them inside, of course, that on property, and they added these new ones. A supply of Steve Doran. This is for transits at the harbor. So transit, transshipment, port operation services, and then shipping line charges. These transit, transshipment services are now added as zero rated. You wouldn't have seen them clearly stated under 8, the old law 870. Then relief supplies, they've added mining, reconnaissance, and prospecting. Now, what is relief? Relief means that you are not like the supplier, you are a person. Technically. When we make supplies to you in that status that you are in, technically what happens is that you are going to what? There are people who use what we call the VRPO, the VAT relief purchase order. But the law is clarified now that make payment and go and get a refund. So we have added the mining, reconnaissance, and prospecting guys. So what is this? In case you are not a technical person, reconnaissance and prospecting is the pre-production stage. So before the mining company actually starts mining gold, bauxite, manganese, and they are searching to see if their field has gold there. Yes, we say they are in the reconnaissance phase. Then prospecting is when they are searching to ensure economic viability of the gold deposit and all. So this is basically saying that mining companies that have not yet started production of actual gold, bauxite, diamond, whatever, right? They have now been added to the list of relief supplies, meaning that they also get the same treatment that the president of Ghana gets. Same treatment that we have for the embassies, high commissions, and all, where they are relieved from what? VAT. Then on the list of relief supplies, another cosmetic change. The old law says we have this thing for raw materials for importers. I mean, importers who manufacture in Ghana and bring in raw materials, right? They were given also relief treatment, but the list, the old law says when commissioner publishes the list of those who qualify, it would have had a 12-month validity. Now they've said every 6 months. Again, this law is trying to see. So we'll check every 6 months. Are you still qualifying? If you are not, we'll kick you out. You don't get the relief treatment for imports again. Then the power to seal off premises under Act 870, GRA could come to lock or seal off your business between 3 and 30 calendar days. If you don't comply, don't issue invoice, they'll come and lock your premises. They've kind of taken this out, but I'm like, it's not a problem, right? It's not a big problem for them if you understand the reference. If you don't get it, it's fine, right? It's not a big problem for GRA at all. It's not a big problem for them. So for this one, because we have Act 915, which gives the Commissioner General more than enough powers, okay? Commissioner has more than enough powers under 915. They can come and take your building and sell it. They can do enforcement action. They can do third-party data. So many things are there. So Commissioner is saying that let's leave 870 to breathe. Let's put everything under 915. So there's a power to seal off premises. There are a few other things to note to finish shortly. The first thing is, you may wonder what happens to LI 2243. For anybody who is wondering, LI 2243 is the VAT regulations of 2016. When an act is passed, the act gives the sector minister responsible the power to issue regulation. That's how Ghana's legal system is. So in our law now, we under Act 870, the finance minister issued LI 2243. Since 870 is repealed, is 2243 repealed? No. The law was quite clear. Despite the repeal of the enactment, the regulations, blah, 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 or any other lawfully made or done under the repealed one, which are not inconsistent with 8, the new law, 1151, and enforced immediately before the commencement, will be considered to have been made or done under this new act and will continue to have effect until reviewed, cancelled, or terminated. In simple terms, LI 2243 is still law as long as it doesn't conflict with the new VAT Act 1151. And until they bring new regulations for this law. Will they bring new regulations? Yes, of course. There are many contradictions in 2243, which I think they have to clarify, right? 2243 doesn't need too much work like that, but they'll need to clean up a few things here and there to clarify some extra things for us. So please, your VAT regulation based on law, the way Ghana law works, not just VAT, is not yet repealed. It is 870 that is gone. This also remains. And it's not just 2243. Any notice, order, direction, or even appointment. Appointment includes appointment of what? Withholding agents for VAT, right? It was done under 870. They are all valid until it is changed under the current law, okay? Then FED Act, this is one of my favorite laws, passed in 2018. It is probably going to finally see the light of day in 2026. We'll see a lot of things happen here regarding this law. And I'll say it is still early days. It's a new law. It came into force just 7 days ago. Implementation is still at a very early stage. At this point, we believe everybody has more questions than the answers. So please let's stay up to date and closely follow any guidance issued by the Ghana Revenue Authority. So I'll leave the rest of the time for questions. Hopefully it's like 20 minutes. We can use it for questions that you may have. If you need training or support, it's on the screen. Like I said, if you want us to come and do the same training, but tailor-made for your organization, send us a WhatsApp. We'll arrange one for you. If you are into retail, manufacturing, whatever, you want how it affects you, you can reach out. We'll agree on a date that works. And then we will kickstart from there. So on that note, we would end the session. Do we have any questions? How it will work is you can use the hand raise button if you have questions. Hey, let me go through the list of people listed here. Before we even start, my quick disclaimer again, I am not GRA. I don't work as GRA. Any answer I give you is my opinion. Is it clear? Okay. If we don't have an answer publicly available yet, I will tell you. So that is about it. Let me start with, I see Eric. You can go ahead. If Eric cannot speak, yeah, can go next.
Hello?
Okay, Eric, yeah.
Yeah. Good morning.
Yeah, good morning.
Yeah, so my first, I have a lot of questions. The very first one is the threshold.
No, it cannot be a lot. We don't have the numbers. So prioritize.
It's a quick one.
Okay.
So now you are saying there's no threshold for business providing for services, that is in connection with the VAT.
I'm not saying the law said.
The law said.
Read of the law here. Don't quote me somewhere.
I'm just clarifying.
Okay.
Then the second one, the real estate, are they still supposed to pay the VAT?
No, we clarify. Everybody under flat rate is now standard rate, unless you are below threshold. And I don't think anybody sells a house in a year less than 750K, unless they are selling. You see those mad houses in the village. If not, every estate person does more than 750K. So automatically, all of them are now doing standard. Automatically, all real estate guys are standard, right? Yeah.
Okay. Then what of rental?
What of
rental?
It's a service, and service has no threshold. Yes, unless it is to regulate.
That one does it have VAT or is withholding?
Oh, they are not the same. I'm mixing two things up. Yes. When we started, I said VAT is something you charge on yours. Withholding is something someone takes from you and gives to government. They are not the same at all. Right. All right. The next question I'll take from Calvin.
Yeah, hello, MSL.
Yeah.
Please, I want to know how does the amendment affect the withholding VAT computation? Since now, so on what base would the 7% withholding VAT be applied?
Good question. Going by the read of the law, withholding VAT should be on the base VAT is charged. So going by that straight, it should be on the same. You get, like, withholding VAT has always been 7% on the base for VAT. Now it is 100. So whatever VAT's base is what you apply your 7% on. Technically, yeah.
Okay, thank you. And the next one, please, since now the taxable activity or the scope of the taxable activity has been expanded to include traditional export. So I want to know whether these traditional exports will be taxed at the zero rate or the standard.
Okay, so for exports, they are under the second schedule. Most exports are zero rated. So it's like we are bringing you into scope so that you charge and also file returns. So even though you are charging zero, you are now taxable. File a return and bring it to us, right? You can take your input deduction and all. So not all the changes are for revenue only. Some of them can be for compliance. We want to track your activities, right? So yes, if it is indeed an export leaving Ghana, it falls under second schedule, 0 rated. Right? Yeah. All right. The next hand I see up, Ikan.
Yeah, thank you. Now that there's no more,
Write your
now that
question.
there's no more flat rate, and everybody charging the standard. Will those who were charging the flat rate also enjoy the input back?
Yes, I mentioned that everybody doing standard gets the same thing. There's no discrimination. Everybody, once you are standard, I think I said it here. Right? Yes, this is it. The last box here, full input output applies. Once you are standard, you get input. Right? Yes. Unless you fall off the flat rate and you go to non-registrable. Right? Okay. Juliet.
Yeah, I would like you to speak again the invoicing guidelines. Right now we are supposed to either link our softwares to the GRA system or
Yeah. What GRA is doing is they want to roll on everybody to their what we call the certified invoicing system or the EVAT regime. It is not fully rolled out yet. There are people that today, as at now, they are still doing pen and paper invoicing because we are not there. Some are still doing the special sales receipt, right? So until everybody is rolled on to that, continue invoicing however you do at the moment. If you are currently on the EVAT portal, continue with that. Hopefully, all the relevant changes there so that you don't suffer. If you are doing pen and paper now, the guidance we got last week was cancel the line for COVID-19 and don't put anything there and do the right calculation, right? So nothing has changed on the invoicing that much. Things
Okay, so how do you hold on? I want to believe you'd have to register. Is that not the case?
Yeah, so before you can even charge VAT, you must be registered for VAT. Before you can even invoice, it's a chain. Register, you become accepted as a registered VAT person. They roll you on as a taxable person. Then when you are charging, you add the 20% VAT in this case. If you are not yet registered, you can't even invoice. So you have to go to your GRA office to do that.
And so I'm speaking as someone who is already registered and using the GRA's VAT manual.
You want EVAT?
Not EVAT, no, the manual invoice.
You want the manual invoice?
The VAT invoice issued by the GRA.
You want it?
No, so that's what you use currently. You are not yet on the EVAT platform.
Hey.
So the question is, do you now go and register for the EVAT platform? Since now you have...
They are rolling taxpayers on gradually, but I can also go to your office and then express interest, but they are doing it in phases. Okay. So if you are not yet on that, you can go to your office and tell them you want to.
Okay.
Right? But for now, they've done large taxpayers, many medium taxpayers, and it's still ongoing. Right? Yeah.
Okay.
So just approach your office and then they'll sort you out. Your TSC will sort you out. Right? Emmanuel?
Yeah, like a quick one. Please, I purchased, I moved some money from my account to my core account. And when I went to liquidate it back to my account, I saw a withholding tax of 8% on the interest. But previously, it was not like that. Please, why? Is that a part of the new tax regime, or are they making any amendments?
Is it a company account first?
Yes, the company's account.
Companies are not exempt from interest, so is that right? Yeah, that's it.
Okay.
Yeah, it's not about the new law at all. Maybe your bank is now enforcing. Nothing has changed on interest withholding. Okay, Daniel.
Yes, hello. So I have two quick questions regarding registration of VAT. Okay. So the first one is now that all service providers are required to register and file for VAT, or like to file for VAT. I want to know, what if the business is not registered with RDG? How will GRA enforce or ensure that these people are filing for VAT?
So that is like it's a basic compliance issue in Ghana. So it's not even about GRA at this point. If you are not registered at all and you are doing the business as a sole proprietor, legally, you and the business are the same. commissioner can catch you, register you, and use your Ghana card number to start taxing you. It's not a big deal, right? So whether registered or not, you not being a registered business doesn't stop you from paying tax. Registered business kind of gives you a legal structure, legal identity. But especially if you're a sole proprietor, right? You can be what? And you can be forced to pay the relevant taxes. But the best for many businesses today, and that is why I said, if you are looking for someone who can handle your very small, I know someone who can. Where is it? You can text this number for the person's due, right? If you're a small business, you need help with GRE registrations, you can text this number and be clear on what you are looking for, right? We would, you can take a screenshot. We would guide you on that. So you are supposed to register first as a business, get your business documents, choose the right structure, whether sole proprietorship, partnership, or a company. Then you do your GRE registration. You must indicate that you are doing VAT registration as well if you are a service provider, right? And then you start complying. But if you're not complying, that's a good time to start generally, right? Yeah.
Okay. So my other question is, if a business provides both goods and services, what threshold are they going to comply with in terms of VAT?
The service automatically makes you registrable. So then the goods don't even matter anymore. Technically, like you are registered for the service, right? Because don't forget the threshold is not saying that anything below 750 we won't collect from you. No, it's like if you are doing below 750 in goods, don't come and do VAT at all. But now if you do goods service and your services has caught you, you've now become registrable. Some may argue that interpretation-wise, let's look at revenue from goods. I know that interpretation exists. So you now start doing segregation. But your goods are not exempt goods. Why are you not charging VAT? Who gets the thinking here? You are one tax person. You've gone to do VAT registration. You have taxable goods. Your argument is that the goods are now less than 750, but you are already registered for services. You see? So I don't think anybody should play with the whole idea of my goods are 500,000, but my service, once services has caught you, it kind of catches everything unless it is exempt because you are now one tax person. If you want to separate, incorporate two different entities, let one deal with the goods. Then you get, then let the service be another one. That one you can dodge. But if it's the same entity and the services catches you at VAT registrable, then you must charge VAT on whatever you are doing. If not, they take your financials. We see a good of 10,000. You can't say, oh, when I sold that 10,000, I was under 750. It is stress. They'll just charge you VAT. Right. So yes, that's it.
Okay,
all right.
Thank you.
All right. Some more info before Zanute, yeah. Some more N. Okay. If not, some more Z.
Hello.
Okay, some more, yeah.
Yes, sir, please, can you hear me? Okay, thank you. I want to find out, is it right for a VAT registered company to quote their invoices VAT exclusive and later add the VAT at the point of payment?
Okay, as in your invoice to your customer?
No, as in I'm a customer, I went to a shop to buy something. The price at the shelf is, let's say, 100 cedis, but at the point of payment, it will be 100 cedis plus the VAT, say 120. Is it right for the VAT registered organization to
for them not disclose the full amount at the time you were picking from the shelf?
Exactly.
At the end of the day, they should just give you the correct amount to pay. If you paid at the counter the correct amount, the law is actually quite clear on this. If let's say you make a supply, you must include the VAT in the price that you are advertising. So technically, you must tell us that this is 200 cedis including VAT. If they don't add the tax, you must be clear that that amount is not without tax. They shouldn't just leave it there without any indication, right? So if they are saying 120, they should be clear, excluding all applicable tax. That is fine. That is not against them. The law is saying that.
It appears following the repeal of the COVID-19, some shops are rather increasing the cost instead of decreasing it, because now when you go the shelf price is there, but when you finish and you are paying, then they'll be adding let's say the get found and the how do you call it and the other levy.
Yeah,
I don't know whether you get me.
That is Ghanaian behavior. We can't do much about it. People will always be greedy, right? We can't do much about that. So GRA will have to handle that. I think that one is outside my powers. But that's Ghanaian behavior, right? Somebody sees a chance to, okay, let me just charge this. Yeah. People always do funny things. We will see a lot of those things. Somebody under flat rates now trying to add 20% and something. Prices of goods for some select items should go up, generally. Many services should become more expensive now, all things being equal. Will it have inflationary effects? Probably. But the argument is that now we have input deductibility. So maybe they won't pass on the cost to us. Like so many questions, right? But let's see. But that one is human behavior. We can't help it, right? Samuel Z.
All right, thank you.
Yeah. Samuel Z, you are muted. Okay, then
Am I audible now?
Okay, yeah, you are.
Oh my God. Hello?
Yes, we can hear you.
Wow.
Samuel, okay.
Yeah. Am I audible now?
We can hear you, but I think you're you go ahead.
Okay, so I need your opinion on a discussion I was having yesterday with one guy from the Big Four. So restaurants or catering services, as they are called, are they really providing services or they are providing goods? Seeing that their description will determine their VAT stance. If they are in the supply of goods, then we can do the threshold issues. If they are under services, then straight away no threshold. So, what is your opinion? Are they supplying goods or services? And the next one.
Let me take that one. So the law kind of clarifies what we call incidental supplies. If you make a supply of goods incidental to a service, it's part of the supply. So it's not a problem. When you go to a restaurant, they don't just say, here's your food, take and go home. As in, they'll say, oh, sit down, you want what? They offer a service, right? So it will be hard to split. They are going to be deemed as incidental unless it's a service. It is only like good. You went to buy your food, no welcome, nothing, and you just took the food and then you went away, right?
Yes. That one, like the woman on the roadside, or not like the one on the roadside, but those eateries on the street of East Legon and all of those ones that you don't necessarily have to sit to just buy and go. Are they supplying services or goods?
It depends on who is.
It's a bit dicey. I think it just depends on how you would defend this. But I just needed your opinion on that. Then the next question.
At the end of the day, there will be some level of incidental supplies there because the food is never collect and go.
Yes. All right. Okay. Can you touch on the NLA, the lotteries again? Did the law specifically mention NLA, or can you just touch on it briefly?
It's not even mentioned at all anymore. You know, the 870 listed lotteries, taking the lottery, they just deleted. So it's just deleted. Okay. That's all.
Okay. All right then. Okay. Thank you.
For the implication, we have to wait for authority guidance from GRA.
Yeah.
Because now, what do you mean by that? Which of the lotteries are now? They just deleted that line entirely with the betting as well. Right.
Okay. All right. Thank you very much.
Okay. Denchi.
Yeah, Mike. Let me start by first of all commending you for this bold initiative in organizing this presentation. I guess the GRA should be looking forward to some sort of collaboration with you in organizing such presentation either quarterly or maybe half-yearly basis for the purpose of, giving us this very useful education. Yeah, my question basically lies on the fact that for us as tax students, we've been advocating for expansion in the tax base within the economy, so that the prospect of gaining more revenue will be very high in the country. This policy of increasing the threshold from 20,000 to 750,000, wouldn't that have the possibility of reducing possible tax revenue that would have otherwise come easily into the tax nets of the economy? I know they haven't decided, but you as a tax expert, I mean, how do you see the possible impact of this threshold increment?
Okay, before I answer, then I want to run away from the title tax experts more. But yeah, I'm an interested Ghanaian citizen. Okay, but yeah, back to the discussion. I think I mentioned earlier, right? They did their analysis, and the math is quite simple. The idea is that 200,000 cedis a decade ago is not the same today, so the value has fallen. In tax, there's one canon of taxation. Adam Smith famously espoused one. He said there was one called economy, right? The cost of collecting the tax should not be more than the revenue you are going to get. Jerry now thinks that if someone does 200K the whole year, the guy doesn't even have accounting software. He doesn't have a shop. Like the stress of going to ask him to file and chase and have you filed, the deadline is coming, penalty. Leave them alone. Leave them alone. But to counter that, you can see they are trying to enforce the modified tax system. Fine, they are not the same. Modified tax is on income tax. This is value-added tax, consumption tax. But the idea is that let's not stress them, because if I'm making them less stressed under modified tax, don't file plenty returns, calculate tax simply, why then should I still stress them with VAT? VAT is not a simple tax. It's actually more complex than income tax because you have to track all your inputs, track which ones are more than 6 months old. It's a lot of work, and charge your output. VAT is work. So they are like, you know what? All the micro and small businesses, leave them alone. So sometimes it's not always about revenue, right? But in tax admin, you sometimes check the economy. That is the cost of administering that tax. If it will cost you like considerably more money to enforce compliance, let that revenue go. Government is happy to do that. But I know they did their numbers before coming to the figure 750. So I'm not worried about revenue loss. To counter that, now don't forget that, let me show you. Don't forget that all these guys are coming to the tax net. If you think about it, 750 is gone. Service providers are in. So they'll get some people from here, the photographers, the barbers, washing bay guys. So it'll balance off. Hopefully, we will not lose revenue. Hopefully, right? Yeah.
All right. Thanks.
Okay. The next one I have here, Rashida.
Good day. Thank you for the presentation. So I wanted to ask, in the previous law, manufacturing companies were not really like the threshold of 200,000 was not really applicable. So when you go to GRA and they are doing their audits, you realize that even though you're a manufacturing company, they don't really look at whether you have gotten to the threshold of 200K before registering you for the VAT standard. I wanted to ask, this current update, is it still applicable that way? So that means if you're a manufacturing company, whether you hit 750K annually or not, you are still liable to be registered under the VAT standard.
Okay, so to clarify, under the old law, there was nowhere that it was said. I've heard this thing before. There's nowhere in the old law that said that if you were into manufacturing, you didn't have a threshold. There was a threshold for all taxable persons, 200K minimum. Then special persons who were doing 200 and 500 and were retailers had their own rate. But the floor was 200K. So if I am a manufacturer and I do only 10,000 the whole year, you can't say because I'm manufacturing. That was not in the law anywhere. But I've heard someone actually mention it before. So
when they are auditing you, they usually say that manufacturing companies are not part of the so-called threshold.
That is not what the law says. That is roadside interpretation. Right? You're not the first person to have heard this. It doesn't mean it is law. So that has to change.
Okay, I have a second question. Thank you very much. If you're a business and you project that you not do 750K and you're already registered as a VAT standard, like under the VAT standard, would you encourage the business to go and register at GRA?
Will I encourage? That is
like your advice.
being registered has its benefits, right?
Okay.
There are some contracts and some tenders in Ghana you can't bid for if you're not having a VAT certificate. So it goes beyond even just accounting and compliance, right? Do the math. If you think the compliance burden and the benefits you get, like input deduction, being able to bid for certain contracts, you think the cost of compliance outweighs the benefits. Of course, go and deregister if you don't meet. But the law still keeps what we call voluntary registration. It's open to all. So even those who don't meet 750 who want to can still go and register. That is always there. It hasn't gone. Yeah.
All right. Okay. Thank you very much.
Okay. DEI. I don't know if it's day, but I want to believe it's day. Go ahead. Okay, I can't hear DEI. Frederick.
Good morning, Michael. Can you hear me?
Yeah.
All right. Thanks. Thanks once again for the session. Two things. First, you mentioned that you have done a technical analysis of what has changed compared to the old law. Would you share this on your socials or on the platform where you have a lot of technical guys? That's an inquiry.
We'll share the video to this. We'll share if you mean the section, this versus section, that's
exactly what
that one. Okay.
You want us to do our homework?
Do yours and let's compare notes. Right. But I mean, yeah, where is it, Kra? Let me show you. Oh, it's here, it's here. Where is it, Kra? I'll think about it. But I mean, I'll share the slides for this one, yeah.
No, that I know. I'm just asking about the one you have.
Again, it is about being careful, right? Yeah. So that it's a slippery slope around this time, right? You don't want to lock yourself somewhere. I can easily share it, present something else. This is it.
Think through it. I'm sure when you decide, we will know.
This is it's yeah.
The second point I wanted to okay.
You can see my screen, yeah. But as to should this document go out, I don't know. I'll see. Right. But yeah.
The second one is just an observation. I reviewed the BOE this morning, and customs still have COVID levy on their network charge. I mean, it's really small, but I mean, based on the fact that Act 1151 is out, it's an illegality. It's just an observation I have made. They're probably still making the changes, but it still shows COVID charge on only the network fees. On this
they've removed COVID from the base for.
Yes, they have, but they are charging COVID for the network fee. That one.
Oh, okay. Someone probably forgot. I think you should prompt GRA. It's like a lot even exists, so they shouldn't be charging. Prompt any officer. I think someone forgot. The IT guy, they didn't delete that line, right? Because if the main COVID is gone, then it doesn't make sense technically that the COVID on the network charge should be there. I should go.
Absolutely, yeah. Okay.
I think.
All right, thanks.
All right. Okay. Frank.
Yeah, this is Dave.
Okay, yeah, Dave, go ahead. They are muted. If you are speaking, you can unmute and then.
All right. Thank you, Michael. My first question is on the input deductibility.
Yeah.
My company is in the food processing industry. Most of our raw materials that we procure are exempt supplies. They are not. We are not able to claim input on these supplies. And some of our customers too are also on the zero rated. Now, how do we handle this? Because if most of our output that we'll be reporting on the VAT, but we are not able to do input deductibility, it's going to be a lot of cost on us. How do we handle this?
Nothing has changed around that as well. It's the same under the old law. If a supply is exempt, the person charging or doing that supply cannot charge VAT. So technically, you can't even have input on exempt supplies. Old law, new law, same position. Of course, you may have auditors, right? You have accountants, you have lawyers who give you other services. DS would have VAT on it. So it's the nature of the industry you find yourself in. You get nothing has changed around that. If you have exempt input, same position, you can't deduct. That's it. Yeah.
All right. Sorry, the last question is not really like a question, but we were on the flat rate system. Now we are migrating to the standard rate.
Yeah.
Now we need to continue charging the VAT until we are delisted by GRA. So I attempted to go to GRA yesterday on the TSC to return the old VAT booklet and pick at least the standard rate book so that we can start issuing. But they said they were not ready, and so we should just continue charging. Now, continue charging on the VAT, on the flat rate booklets.
Yeah. So yeah, I mean, what you are saying, I've heard other similar stories like that. I don't want to be the one to say it, but I don't think they are 100% ready to implement. Maybe they should have done more work before rolling this out. But it's like that for any new law, right? If it's a major change, the first month will have a lot of, because I can bet you there is some service provider in some corner of Ghana somewhere who doesn't know there's something called VAT 1151. But that person can register. And it's not their fault at all. You have to educate the populace. Has GRA done enough education in all the languages regarding the law? No, I've not heard adverts in that. Okay, I don't speak Dagomba, but I've not heard a Dagomba advert, a tree advert, or maybe you can say I'm not in the north, so maybe forgive me. But if those in the north, have there been any adverts on your radio, whatever channels announcing I don't think so, right? Yes, if you've not done that, you can't blame the service provider who is in the north or some parts of the western part of Ghana or in the Volta region or in wherever, Sunyani, anywhere, who has not heard of this. You see, so beyond the authority themselves not being ready with the returns, with the invoice booklet and all, let's even expand it. Are the Ghanaians even aware? You see, so there's just a lot more work to be done. Education. Right.
All right.
Yeah.
All right. Thank you so much, Michael.
All right. Hey, let me mute you. Frank, yeah.
Yes, Michael, can you hear me?
Wait, let me mute everybody first. Then, okay, go ahead, Frank, yeah.
Okay, so I wanted to ask the update, which aspect affects banks, and banks also mandated to register for the VAT. Services are now encouraged or obliged to register.
Which part affects who?
Banks.
Okay. So generally, when you check the law, like I said, management fees are now VATable. So it depends on what the bank does. But simple banking services may not apply. So I'd say do a review of your services you offer as a bank. Beyond just commercial banking, do you have any special services you do? Do you do custodian services for some customers? Do you allow people to come and keep their precious gold and things with you? You get, it depends on what you do. Some may make you registrable. So the bank must do a review of their list of services and then register accordingly. So it depends on what you do. Yeah.
All right. Thank you very much.
Okay. All right, Jerry.
Okay, so thank you, MSL. I wanted to find out, with the new VAT regime where we have the debt fund and NHIL used as input, are we going to file the debt fund NHIL as we do previously separately from the VAT? Or is going to be one file? We file all of them together as one. I want to find out.
Okay. I'm saying this in terms of reported speech. So don't quote me anywhere. The last thing I heard, and it was purported to come from someone in GRA who is quite senior, right, is that they are designing one return for everything. Again, things are very fluid now. If it changes to 2 later, then it means they change their mind. But as of today, we should expect a single return for everything. As of today, right? Yeah. But don't take it as mine. I heard. Okay. Yeah. That's it. All right, Benjamin.
Michael.
Okay, Benjamin is not ready. Awal is not ready. Shadrach.
Okay, thank you, Michael.
Yeah. Okay,
Yes,
wait. Wow. Hold on. Wow. Yes, go ahead.
Yes, please.
Okay.
Yeah.
But we are also on the VAT flat rate scheme. But your submission, you said we should come to the COVID-19 review and leave the 3%. So what happens to the new, like the NHIL and then the GET fund?
They said you should cancel COVID and do what?
No, so I'm asking, how do we give our customers a VAT invoice since we are using the VAT flat rate, which was at 4%?
And so technically, they should have given you new booklets for standard rate. Again, these are all logistical challenges at the GRA level, right? So ideally, you go to the office, they give you new. In fact, they said you should bring your old booklet and come for new ones. That's what we're told, right? If it's not yet ready, it's just readiness. But it's normal. They'll fix things. So for now, what should you do? I don't want to be the one to say it, right?
Okay,
Contact your
okay, because actually what we should do for now, since the new booklet are not ready, I wanted to know if there's a way we can do it since the new booklet are not ready. But
I have an answer. But this session is being recorded, so please contact your TSC. So that it's not like I said you should do something. I have an answer. Just ask your TSC for what to do, right? So that it's not. Yeah, I don't want to lock myself.
Thank you very much.
All right. Okay. The next one is Shadrach.
Thank you, Mike. I have a question, and it's about a real estate company which sells apartments which have already been built, fully furnished apartments. And the clients are given payment terms of 3 to 5 years, and then they pay in bits. And this question of VAT payments on the client's payments, how will you advise is the best possible way to pay VAT? Should we wait for the end of the term, that's the 3 or 5 year full payment before VAT is then paid, or we should do it on as and when the clients pay?
Okay, so the law has a provision around where you make payments in bits or installments, right? The law says that you deem the good to have been supplied for each payment that is technically made, right? So going by that, it should be if you've given the person a long payments period, 5 years. It depends again on the substance of the transaction. So this one, I would say, ask your authority for clarity, because there are two possible ways people interpret this. You've actually sold the building, you've invoiced, you've booked the revenue, you are just giving them a better payment period, right? Has ownership passed to the client? Have you given them key? Do they have the papers? In that case, you have sold the property. We don't care about your cash flow arrangement. Another one is, are they paying in bits, and when they finish paying, the property becomes theirs? Different conversation, you get? So it depends on what it is, but still ask your tax office for guidance.
Yeah,
right.
I think
I wouldn't want to
with this one, let's say payment of 60%, then ownership will be transferred.
I know. Ask your tax authority or your tax office for guidance on that, right? Yes, because there are nuances here. Have you sold the property to them? And is it just a matter of it is now yours, you are paying, or you've paid part, you pay it, then later you now become the owner? All of those have their implications, right? So get professional advice on that one. Okay. All right. You said you have a second one.
No, that's fine. Thank you.
All right. The next is Phil.
Yeah, Michael.
Yeah. In the question list.
So, Michael.
Yeah. Yeah.
Okay. So with the input deductibility on the levies, how does that work? Because usually, I know for the input, you only deduct the VAT component on your input, like the things you bought. So now that they are saying the NL and the VAT also becomes an input, how does that work?
It's nothing special. It's the same thing. So they'll design a new return that has boxes for every input. That's all. So you are saying the levies are not deductible, only the VAT component, because that's what the law said. Now the law is saying that everything is deductible. So they'll just bring new returns. So the same way you could subtract the VAT from your output. Now the levies too have maybe their own boxes, or if it will be one box, we are yet to see, but probably will be at least one box for levies, another box for VAT. Under the input side, you subtract from output, get your net payable or credit, then you file your return and pay if anything. Right? So it's the same mechanism. Subtract from output.
So meaning it will be the whole amount paid under the annual get fund will now come at deductible.
Yes. What was on the invoice that they gave you, that figure, whatever it was. So let's say you got an invoice here. The annual of 50. This is the input tax. So the 250,000, these are all non-deductible. Whatever is on your invoice, as long as it meets the rules. Someone's microphone is on. So yeah, that's it. Right. All right.
Hello, Mike. Hello, Mike.
I didn't call you, but go ahead. Yeah.
Please. I wanted to ask a question. For those of the withholding tax agents. Sorry, I joined in late, so maybe it has been spoken about, but I wanted to ask. I wanted to find out, is the formula for the charging withholding tax and withholding VAT still the same now that these changes have been made for those of the flat rates and the standard rate?
No, old flat rates did not have withholding VAT applied on.
I mean,
that.
withholding tax.
Okay. If you mean the base for calculation, then they are not the same. The old law, the base for withholding VAT was supply amount plus levies without VAT. Now, the base for VAT is supply amount without any tax. So by extension, 7% should still be on. It means now, all things being equal, the base for withholding VAT and withholding tax under income tax should now be the same. Going by that logic, yeah. My opinion, yeah.
Sorry, I want to do a follow-up. So does that mean that you are charging 7.5 on the base as withholding tax, then you charge 7% on the base as withholding VAT?
You only charge 7.5 if it's a service, so that we don't confuse those here, because there are many withholding rates, 3% for goods. You get?
Okay, so when it's a service, you charge 7.5 withholding tax and 7 withholding VAT. But when it's goods, you charge only 7%. I mean 7%. I mean 7.5%.
No, you are mixing too many things at this point, right? So here's the thing. Income tax withholding has not changed. So continue doing what you are doing. Yes. You get an invoice. We always withhold on the amount without taxes. That has not changed. They've not even touched that law. So leave it like that. If it's a service, 7.5 on the amount without all the taxes. Now it is withholding VAT that we are saying the base that VAT is charged on is no longer levy inclusive. So you are shifting your base to now look like the same base for income tax. Do you get? So don't touch how you do income tax withholding. Just shift the amount on which you charge your withholding VAT of 7. The rates have not changed. Withholding VAT is still 7%, but now on a different base, which is the first base amount of 10,000 on the screen here, all things being equal.
Okay.
All right. The next question, we have just 10 minutes, so I'm sure I have to, please let's get through our questions. Ben, I might not be able to take every question. Sorry about that, but Ben, say.
Please, I wanted to ask if we are to apply these new VAT laws in the upcoming March exam.
Oh, for exam, no. All exam bodies have a 6-month layoff period. So it means exams after June. So if you are writing CIT, February, it won't apply to you. See, the GRI office self has not brought invoice. How do they want students to go and calculate in the exam yet? So don't worry about that. If you're writing ICA in March, it's also not applicable to you. So don't stress. ICA March, CIT February doesn't apply. But ICA July, CIT August, definitely. Yes, by then everybody would have understood this. So yeah.
Thank you very much.
Godwin.
All right. Good afternoon, Mike.
Yeah.
Yeah. First of all, I'd like to thank you for the opportunity for this clarification on the new VAT Act. And then thank you for the opportunity to ask the question. Then my question has to do with the voluntary registration. Under the old system, there were certain about 3 or 4 circumstances under which the Commissioner General can reject your voluntary registration. Do those 3 or 4 conditions still apply under the new act?
It's still there. The same. They didn't change anything there. Yes. So if you have a fixed place of abode or business, you're not a fit and proper person, you won't keep accounting records, you won't file returns. Same thing.
All right. Thank you so much.
All right, Marcus. Okay, Marcus is not ready. Emmanuel.
Thank you very much. Please, I want to ask if there is any take on this new VAT for the aviation industry, I mean the airlines in Ghana.
So supply of transportation services, air transport was removed under 870. This law maintained that removal. So air is it's still not exempt. It's now taxable, or it's still taxable, more like, let me put it that way. The list for exempt supplies, they've taken air out. So it means air transport is still a taxable supply. Nothing has changed around air transport. Right, yeah.
Thank you very much.
Okay. Shalom. Yeah.
Yeah, I wanted to inquire about the
your voice is a little difficult to listen to. Can you get closer to your?
Okay, so I wanted to inquire about the custom. I mean, the tax base.
It's honestly very difficult to hear you. So if you can't have a clear sound.
Hello.
Okay. I'll move on to Michael Ababio. Like, your voice is a little bit scratchy. It's very noisy, so it's hard to hear. Michael, yeah. Ababio, Michael. Okay. Next person, Hammond.
Okay. Hello, Mike.
Your background is very. The lady can hear her more than you. Your background is quite noisy. Okay, Hammond, please go ahead.
Okay, Mike. Okay, I wanted you to touch on companies dealing with oil and gas. Even though I know the rate have not changed. Secondly, it's because I joined late.
What rate has changed?
I know that the rate in terms of VAT withholding and all that has not changed. But then I didn't join early, so I wanted to know where the changes are, or that applies with this new regime. And the second,
nothing has changed for oil and gas. So whatever was applied will apply now. Yeah.
Okay. I also have experiences where, in terms of withholding, people charge on the taxable supplies plus the levies. I mean, if you can also touch a bit on that, confirm that, because I know it should be taxed on the taxable supplies. Not
withhold what? Because there are two withholdings we are talking about. So which are the
withholding? I'm
withholding?
talking about normal withholding taxes, as in for supplies and services.
When you say normal, which one is the abnormal one? I'm putting your level.
I mean, normal goods and services, not VAT.
So you mean income tax withholding?
Yes, income tax withholding.
Because
For
normal
goods
makes it
and services.
normal.
Right.
Okay. So for income tax withholding, it should always be on the 10,000 on the screen. That's the first figure here, right? That has not changed. It is still the same thing. So if somebody was doing it plus levies and they were wrong, if it was income tax withholding, then they were wrong. Then, I mean, you should correct them, right?
Okay.
That was
I've experienced a few CAs doing that, and when you draw their attention, I mean, the feedback isn't that nice. So that was what
sure it wasn't withholding VAT they were doing. Be sure.
on normal goods and services, and they were charging on goods taxable plus the levies instead of the taxable itself. So I wanted you to clarify that for me.
Because you said they are CAs and we
Oh,
are all in the same profession, I would not say they are wrong, but show them, take a screenshot of this and say, oh, you went somewhere and then somebody told you they should consider this. Okay, because I want to believe their professional competence and due care should be through the roof. Okay, so but if they were doing that, it's not correct.
Even if you share with them some that they don't listen because they feel they are asleep. So that's why I wanted you to clarify that.
It's fine. They probably wrote advanced tax when there was no VAT in the syllabus, right? Allow them to
all right.
Don't know much about tax anyways, right? It's fine. Okay. The next person is Marcus. Then Julie, then Uni, then we are done.
Oh, I'm here.
Yeah. No, Ikan, you've asked the question already, so let someone else also. Marcus, go ahead. Yeah.
Yeah. Good afternoon, Michael.
Yeah.
CST, Communication Service Tax.
Yeah.
From the guidelines on the Act 1151, indicate that there's still that cascading effect. I don't know whether the authorities didn't take a look at it because the former levies had that cascading effect on the computation of the VAT. And if you check the guideline,
they are very much aware. It wasn't an oversight. They know what they've done.
Okay.
So I think, it's not an issue.
Okay.
Yeah, I highlighted it here. So they know what they've done. Let's leave them alone. Yeah.
Yeah. Secondly, regarding the single return filing, I had an opportunity on the second with regards to one of the sensitization workshop organized by the CIT, where Dominic Knapp was the resource person. Same question was put to him.
Add doctor.
Ghanaians thank you. So sorry, Dr. Dominic Knapp.
Okay.
Same question was put to him. He insisted that the single filing is what is proposed. However, he took cognizance of the fact that they'll look at it so that there'll be a different filing for the levies as well as that of the VAT. So yeah, I don't know. Yeah.
No, it's not a mistake. So I understand the timeline. That meeting was on a Friday last week.
Yes.
Right? Yes. That evening, I'm in a certain group where he and other GR people are there. They posted an update that said they are proposing the single. And again, that's what I'm saying. It's a very fluid period. Don't take anybody that's final. Things are changing. Right. In fact, all today, take it as my opinion, right? So they could even change their mind tomorrow and say they'll do 3 returns. One for VAT, one for it depends. But as it stands now, I think the last thing I heard was there'll be 1 return. But let's just wait for them. Yeah.
No problem. Thank you very much.
Judith, then Eunice, then we are out of here. Okay, if Judith is not ready, Eunice?
No, I'm here. Sorry. Hello?
Okay.
Yes, I want to find out if we can get access to your slides.
And we'll find a way to share it.
Or if there is any documents that's a release that we can have access to.
We'll share this on social media. It's fine.
Okay. All right. Thank you.
Then who else? Eunice. There are some comments Hey, I'm not sure I can answer all of them. If you have a pressing question you typed in the comment and you are still here, can you please raise your hand and ask? If not, I think our time is over by like
Please,
10.
I've not asked my question.
Okay.
Yeah. Okay. Good. So good afternoon, everyone. Please, I want to find out when you are preparing an invoice for a client who is exempt from NHIL and get fund levies, do you put nil in the fields, like in those fields on the VAT invoice, or do you still calculate the NHIL and get fund in the invoice and then they'll still not pay it?
It depends. Some of them are relieved. So it depends on what they have communicated to you. So for relief persons, the logic is they should pay and be given a refund, or some will give you a VRPO, or some actually have parliamentary exemption. So it all depends on what the arrangement actually is. So check, is it relief or exempt, right? And then act accordingly. So obtain whatever government communicated to them, right? And then do it. If it's a relief supply, some of them will give you a VRPO, which they have to phase out, or some have to pay you. You charge them, they pay you, then they go for a refund, right? So it depends on the type of special treatment they've been given by government.
Okay. All right. Thank you.
Okay. So I think I've seen a lot of questions in the comments. Some are like a full paragraph. Please, if someone can, you are here and you've not spoken, there's a question, you can go ahead. Raise your hand, let me see. Okay, Kingsley, your hand is up.
Hello, Michael.
Yeah.
Hello. Yeah, so with the flat rate people, so I want to understand, I think I overheard some explanation, but I didn't join early. So you mean if you should continue to charge the VAT rate, is it the whole 20% that we are going to charge from now on going, or we are going to charge because I know the flat rate has been repealed. So are we now going to charge the 20% from now going?
Yes, we touched on that earlier, so we'll share the recording. But yes, that's the answer. But you can check the detailed discussion on that. Right. But yeah, answer is yeah. Okay.
Okay. Thank you.
All right. Yes. Does anyone have a life or death question? That if you don't ask, something will do you. Please raise your hand and let me call you.
Yes,
if you know
yes,
something,
please.
or it can, you've asked the question. Okay, go ahead.
Okay. Please, when you say not to pass the cost to the final consumer, what does it really mean?
Did I say that? I think how did I say it? I'm trying to avoid you said
Because
this.
it was at a point where you said now that the inputs is not deductible, they will not have businesses wouldn't have to pass those levies to the final consumer.
I'm not sure that's exactly what I said, but when it comes to, so here's the thing, businesses have a base cost. They add their margin, then they tell you what to pay. So it is not even tax. It's like basic business, right? I have a cost. I bought the good for something, or it cost me something to offer that service. I add my cost, then I charge you. If there's any cost I don't want to bear, I'll add it to you to pay. That's all it means when we say we are passing on to customer. It's not any special magic or anything.
Thank you.
So they'll add the cost. But again, in economics, there are some goods that behave certain ways if the price changes. The economists call that elasticity. There are some items, if the price changes by 1%, its quantity demanded will change by more than 1%. So in that case, you are more careful if you are changing that price. Okay, not to make that economics class. So if you want to pass on, be careful. What kind of good are you trying to change its price? Because a unit change in price could lead to a more than unit change in quantity demanded. And you don't want that to affect your business, right? So passing on cost basically is adding cost that you don't want to suffer yourself. It's a customer collect and pay, right? Yes. So they have that option if they cannot deduct or they don't want to bear whatever, they can pass it on to the customer, right? Okay. Yes. Is there any? This one was not life or death, if you ask me. But do we have any like life or death? You don't ask. You can unmute and then ask. Yes.
Hello, Michael.
Okay. Has
Yeah,
to be
good
life or death.
afternoon. Yeah.
Okay.
This is more about the effectiveness of the VAT. You have a PO that was issued to you, let's say last month, which include the VAT, the normal computation of the, which has been repealed, and now you are in 2026. So what will be the effectiveness? Am I going to apply the new tax rate, or am I going to compute last year's rate?
So somebody has brought invoice to you to pay.
Yes. No, a PO which was computed based on the previous tax rate. Now I'm going to invoice the person. Am I going to use the current VAT rate, or am I going to use the previous VAT rate?
The person has not done the supply yet.
He has done, has been that it's left with the invoice that we need to invoice.
Okay. So the law has clear rules on time of supply. It's different if it's an indication like pro forma. Pro forma, if you've not done the supply, you are showing an interest, then the supply has not been made. But if they have actually given you the supply already and you are now about to invoice and receive payment, then my answer is check the time of supply rules. It's not really about change of law. There are clear rules around that. Although for this one, I have heard that GRA has, not even GRA, right? There are talks of different treatments. But Section 39 of the new law, if you have it, read 39. There's a time of supply rule. There are some guidelines at the earliest of some things. So look at whatever occurred first. That is the time of supply, and apply whatever tax was there at the time. Yeah.
All right. Okay. All right. Thank you.
Again, my opinion. Right. Okay. One more life or death question. Last one.
Hello.
Okay.
Hello, sir.
Yeah.
My question is, accounting firms who provide auditing for companies, are they supposed to charge VAT on the invoice they raise for the company to pay?
It has never been exempt. Not under the old law, not under the new one. Audit services have always been taxable supplies. Only difference is that maybe in the past, if you are an audit firm and you're doing less than 200K, you may have said you won't charge. But now all audit firms must register and charge. That's the position. It has never been exempt, ever. Right?
Yeah. Okay. Does it mean even if you are a tax consultant and you provide service to small businesses, you're supposed to charge VAT on the service you render?
It doesn't matter who the service is to. It doesn't, like, let me show you. You are even talking about consultants who has a title and has a position. I'm saying that these people here self must also register. You've called yourself consultant. You have posts. The guy who is cutting nails here, by extension, should also register, if that helps you clarify. So it doesn't matter if your audit service or your consulting is to whoever. Services, unless they are exempt, must register and charge. So ladies and gentlemen, we'll end the session here. I want to believe if your question has not been answered, we'll probably have another engagement, hopefully some other time. Thank you to everybody who joined the session sometime along the way. I hope you found this helpful. If you follow us on social media or you follow my account somewhere, we'll post it, you'll see it, right? So keep an eye on our social media pages. For YouTube, you can check anytime today, all the way till tomorrow, thereabout. You'd see the video. Thank you for coming. Happy New Year. And I hope this was helpful. Have a lovely day. Bye.